Hey everyone, welcome to This Explainer. Today, we're diving into something that is an absolute game changer for the accounting and bookkeeping world. Look, if you're feeling bogged down, underpaid, or just kind of stuck punching in numbers after the fact, well, you're definitely not alone. The old way of doing things is just burning people out. So today, we're looking at how you can transform from a traditional, reactive order taker into an empowered, highly strategic partner. It's really all about completely rethinking the value you bring to the table and flipping the dynamics of your client relationships. So let me start off by asking you a straight up question. Are you just a bookkeeper or are you a financial architect? It's a massive distinction, right? We're going to challenge your current mindset today and set the stage for a total transformation in how you operate, how you structure your time, how you bill, and most importantly, how you manage business owners so you're actually the one leading the charge. All right, let's dive into this. Here's our roadmap for building this entirely new approach to financial operations. We'll start with the financial architect mindset, move into aligning expectations between you and the owner, define the scope of your work, map out a strict communication blueprint, and finally, look at how we can automate the chaos. Okay, let's jump straight into section 1, the financial architect mindset. So what's the big psychological shift here? It's really the difference between just handing over advice and actively coaching. A traditional bookkeeper might just slide a financial report across the desk and call it a day. But a financial architect, they coach. If you see, say, a 26% spike in parts expenses, you don't just point it out and move on. You ask the owner targeted questions to uncover the real story. Was there a supply chain hiccup? Was it tied to a massive new project? You're helping them read the story behind the numbers, setting real boundaries, and building resilient systems that protect the business long term. Basically, you're shifting right out of the back office and jumping straight into the passenger seat. Moving right along to section 2, aligning owners and bookkeepers. This part is absolutely crucial. Get this, roughly 50% of all accounting mistakes happen simply because the owner and the accounting pro are speaking two completely different languages. It's like a built-in tension. The business owner naturally wants to make money, see the big picture, scale up, and keep things running smoothly. They just want someone they can trust to handle the details. But you, the bookkeeper, you're deep in the weeds. You absolutely demand correct information, pristine double-entry accounting, strict SOPs, and exact punctual data. As a financial architect, your job is to build a bridge across that massive gap. Because honestly, if you don't reconcile those two worlds right off the bat, the relationship is doomed to fail. Which brings us to section 3, defining the scope. Look, to survive and actually be profitable in this industry, you've got to take the reins from minute 1. Step 1, the interview. And remember, they aren't just interviewing you to see if you're a good fit. You are interviewing them to uncover the real state of their books. You've got to poke around in the dark corners so you don't end up doing a massive, unpaid cleanup job down the road. Step 2, explicitly define the exact accounts in your scope of work. Leave absolutely zero gray areas. And step 3, set ironclad submission deadlines. You dictate the schedule, not them. If you skip these steps, chaos is basically guaranteed, and guess who's stuck cleaning it up on a Friday night? You are. Let's put this into perspective because scope creep literally steals money out of your pocket. Imagine you quote a client for 10 hours a week at $30 an hour. Sounds pretty solid, right? But then, because their books are a complete disaster and you didn't set boundaries, you actually end up working 30 hours. Now you're essentially making $10 an hour. Even worse, if you have to hire outside help to cover your other accounts because you're so bogged down, you are literally paying out of your own pocket to keep that messy client. That's a terrible business model. You have to draw a hard line. Put it in writing. I will reconcile exactly 2 debit accounts, 2 credit cards, and 1 line of credit. Period. Anything more than that is a totally new conversation and a new fee. All right, let's hit section 4, the communication blueprint. This is where we lay down the law on how and when documentation is handled. Raise your hand if you've heard this exact phrase from a stressed out client. I just don't have time to explain this receipt right now. Yeah, we've all been there. It's so tempting to just sigh and say, okay, fine, I'll figure it out. But as a financial architect, you know that indulging that bad behavior completely compromises the integrity of the business's records. When you let it slide, their disorganization literally becomes your liability. So what do we do about it? You drop a hard, non-negotiable rule from day 1. No verbal explanations. Written documentation only. You've got to explain to the owner, hey, my main job is to protect your business. And to do that, you have to rely strictly on paper trails and full statements, not what they vaguely remember from 3 weeks ago. You simply can't argue with paper. And trust me, neither can the IRS. When the auditors show up, I think it was for gas is just not going to fly. Let me give you a perfect example of why this is so critical.
Let's call it the Uncle Jimmy disaster. Say a client texts you a blurry, quick picture of a Verizon bill summary and verbally says, "Oh, yeah, that's just the company's cell phones." You want to be helpful, so you enter it blindly. Fast forward 10 months to an audit, and boom, you realize they were also paying for Aunt Doris and Uncle Jimmy's personal cell phones and home internet on that exact same bill. Because you didn't demand the full itemized 20-page statement up front, you now have to unravel 10 months of completely inaccurate bookkeeping. You've skewed their profit margins and created a massive headache. Always, always demand the full details up front every single time.
And that brings us to our final section, Section 5, Automating the Chaos. This is the last piece of the puzzle, using modern software to actually enforce all those boundaries and SOPs we just built. And I want to start with a crazy number, 800. That is the staggering number of manual transactions a single medium-sized company can rack up in just 1 month when their field techs are running around with a totally chaotic mix of gas cards, credit cards, and charge accounts. It is an absolute nightmare to track and reconcile. Just imagine trying to hunt down 800 crumpled up receipts from truck dashboards and glove boxes. Yikes. But a financial architect looks at that mess and instantly spots the massive inefficiencies. They see that holding balances across all those fragmented cards is causing, say, a mind-blowing $25,000 a month interest strain. That is pure profit just walking right out the door. Your job is to pull them out of that hole. You tell the owner, "We need to consolidate these cards right now to stop the bleeding." You eliminate that interest drain, and you set up rigid systems. Immediate, on-the-spot receipt scanning from the field. No scan, no reimbursement. Simple as that. And here's how you actually enforce those policies on the fly with a modern tool like Expensify. Step 1. A tech buys a part and instantly snaps a picture of the receipt on the mobile app before they even walk out of the hardware store. Bam, paper captured. Step 2. The custom rules you've pre-built into the system automatically read the vendor, categorize the expense, and apply the right local tax rate, all without human intervention. Step 3. You, the bookkeeper. Simply review the digital report, flag any policy violations like an unauthorized lunch, and release it straight into QuickBooks. The chaos is totally automated, your boundaries are respected, and most importantly, your time is protected. Which leaves us with one final thought to wrap up this explainer. When you shift your mindset from a reactive data entry clerk to a proactive partner, when you clearly define your scope, set firm communication boundaries, and leverage powerful automation, you completely change the game. You change your value. So I'll leave you with this. Are you ready to stop just fixing past mistakes and start actively architecting financial success? Let that shift in perspective sink in and go take control of your financial partnerships.